Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. We're taking a look at ROST stores. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of Likefolio. We've had a big focus on retail all this week. We've looked at Target, we've looked at Walmart. Now we're looking in the discount retail sector. TJX had strong numbers. I'm curious to know, when you look across your sentiment data, what it looks like for ROST stores compared to others.
Yeah, I tell you what, we always talk about this sort of K-shaped economy, haves and have-nots, and, you don't want to compete on price, but I tell you, ROST stores is somewhat blowing that thesis up in that we're seeing higher end shoppers sort of trade down. They've been on, the company's been on an absolute tear. They're trading basically at all-time highs, 162-ish. Last quarter, their sales were up 7%. Even though TJ Maxx is sort of the leader in this space, we are seeing, more people come to the stores. They're buying more per visit. And they've had quite a turnaround. I mean, performing really well. They've got, ladies apparel is actually becoming a growth leader. Their cosmetics is the strongest of all of them. They've improved access to closeout deals, so they're able to compete on price. And like I said, it's not just the lower income people or medium income. It's the higher income people who are struggling a little bit more. Things are a little tighter and they're trading down. And so very strong numbers out of ROST stores so far this year, doing really well, kind of bucking the trend. Another thing that we saw that they talked about in their last earnings report was the tariff exposure is sort of easing, and they're expecting that to go away or at least normalize so that margins can come back, and they're not too worried about that. They just opened a couple of stores in Puerto Rico and more stores in the New York metro area, and all of those had strong openings, much stronger than expected, which just, lifts investors' expectations even more. So, when we're going into this earnings report, I think it's against a backdrop of pretty high expectations from investors. So it's going to be difficult, to reach those levels. I mean, again, you're talking about a stock that's trading at all-time highs. And, the stock's doing well, obviously, but then all of the stores are performing strongly. So on this chart, we do have a bit of a divergence to the sort of the downside, where that blue line is, our data, where the dotted line is the stock price. So we think the stock is probably running a little bit hotter than the data justifies. But also note that big spike on the left side of the data for the blue line, that's Christmas and seasonal shopping that hasn't quite started. It's beginning to ramp right now, but it hasn't been accounted for in this chart. So it's not a huge disparity from last year. We're still up on I think it's about 12% year over year basis for the data that we have, but the stock is just outperforming. So, if it wasn't for the stock being at all-time highs, we'd be pretty bullish. But that tends to ease us back a little bit. So I think investors have very high expectations. I'm not sure if they're going to be able to meet them. We're not necessarily bearish, but it's definitely cooled the bullishness that we see from the data.
Yeah, Landon, that's kind of the chart that I was going to kind of highlight, where, hey, the stock price is running up a little bit thicker than what you guys have as far as your data goes. But, you look at, it seems like they're executing along the same lines as TJX in this space. And now you throw in Walmart. Is that one of the things with ROST stores? It's really inexpensive for this company to open up one of their stores compared to other retailers. Their margins are okay, but are the affluent consumers trending down towards ROST stores just like they're doing into Walmart? Is that kind of what you look at as far as your data states, that, hey, ROST stores is doing good because, hey, in good times they're doing well, in bad times they can do well because people trade down?
Right, and that's not something frankly, I would have expected. But yes, they mentioned this on their last earnings report. And so, we can dive into the data and read specific mentions on social media. We don't have an algorithm that can quantify it, but I can tell you that we've seen a lot of people talking about trying ROST stores for the first time. It's a lot cheaper. There's a lot of great deals, that kind of thing. And when you look at the history of those accounts, it's obviously someone trading down. And so, yes, we have seen anecdotal or at least qualitative evidence of that happening on social media, and it's supported again by the company reporting the same. So I would have thought that that's not the case again with all the talk that we've had about the K-shaped economy, haves and have-nots. You know, they're actually sort of proving to be the exception that proves the rule, and they're a little bit immune to this. Apparently they're going to do well in the not so good times, and they're going to do well in the good times. So you know, hats off to them and TJ Maxx for both being able to execute very well. Walmart as well. So now I think it's really just up to investors to gauge this and say, all right, you know, obviously, you know, when it comes to an investor, what you're doing is you're taking your dollars and you're competing you're buying one stock versus another, right? There's always a different investment that you could make. Now, you know, you asked me an hour ago, and I think everybody would have said, hey, let's get into tech. Let's get into, you know, let's be aggressive and get into growth stocks. And now maybe not so much. And so they're competing with this more as a more safe play, if you will, because they're going to do well. They're going to weather the storm. They're going to do well in good and bad times. So I think that that's the case for Ross Stores and TJX, those kind of companies. But you know, when that changes and safe is no longer in vogue and maybe growth picks up again and you know, Nvidia can lead the way higher, we'll see, then maybe that's not the case. And that's when I think people are going to evaluate, well, maybe this stock at all-time highs isn't justified. Yeah, the company's doing well, but are they going to give me the returns that some of these other companies who've sold off so much could potentially give me? So that's kind of what's going through investors' minds right now.
So, yeah, let me ask you this about why hasn't ROST, in terms of shares, performed as well from your perspective, especially because of, you know, how you all analyze your earnings for, as well as TJX? Because I do hear your point about they're more affluent. Listen, I know Gayle King has gone to ROST before, but is it a one-off thing when a higher income shopper goes there, and why the divergence between how those shares have performed compared to TJX?
Well, I mean, I think that they're doing well, maybe not as well as TJX, obviously, but they're still doing well. They're pushing up on those highs. For whatever reason, when we look at mind share, so that's the number of people looking at, talking about all of these sort of discount retailers, TJX is a very dominant player. I believe the stat was over 80% of mind share. So they just dominate this space. And I think Ross is just sort of beginning to trickle into that. And so you can kind of see it in the data. I mean, TJX is up 11% on a year-over-year basis, whereas Ross is up 12%. That sounds like they're about the same, but TJX was higher a year ago, right? And so the fact that they still are increasing that lead, again, this is comps year over year. So they've done a good job of growing and continuing to grow, whereas Ross has, you know, just started, I think, down this path. But again, pushing up on these highs of 162. I think they're doing well. It's just, I think when it comes to consumers, when they think about saving a little bit of money in these stores, TJX is the first place that they think of at a very, very high rate, 4, maybe 5-to-1 ratio versus Ross Stores. And I think that's where the lead comes from.
All right, thank you, Landon. That's Landon Swan, co-founder of Likefolio, with a look across Ross Stores. Now, for the trading perspective of all things Ross, I'm going to yield the floor to you, Tom. We'll bring Kevin back in here. We got some good insights on, you know, what the discount picture